Hey everyone, my name is Kyla. Welcome to my channel where I talk about the stock market and the economy amongst other things. This is Solutions to the Problem. As a reminder, if you want to consume this in the written format, there is a newsletter form. If you want to consume this in audio-only format, there is a podcast form. Like, things are happening. Things just keep on happening. Mostly I want to talk about Ponzinomics, Telonwitter, and the macroeconomy. So Ponzinomics, Kristen Stone had a good tweet and she said, in Web3, we thought giving early contributors tokens to a project would incentivize participation. Instead, it incentivized greed. Here's the deal. Humans are little raccoons. Like, they're little greedy, butterfingered things. We are in the scam era. It began with Theranos and it doesn't seem to be ending anytime soon. And it's mostly because of that get-rich-quick mindset that is just permeated into our world. Gobble up money isn't bad. Like, greed has encouraged a lot of innovation. Like, people who normally wouldn't start a company might start a company that helps the world because they're like, oh, I can make money off of it, even if they weren't naturally altruistic to begin with. It gets into a whole rabbit hole of like, what does money value ethically mean? Is your token ESG? Like, that kind of stuff. Barry wrote a good piece on this called Purposeless Capital, and he said, without purpose, money is merely an entry in an accounting ledger. The capital tied to a useful purpose has magical powers. SBF of FTX went on Odd Lots last week. Also, oh my god. Also, I went on Odd Lots. I went on there with Lily Frankus, who is brilliant. So if you want to go listen, I'm there. But I'm going to talk about SBF and Matt Levine going on Odd Lots. But I also went on Odd Lots, which is really cool for me. Odd Lots and SBF, they basically talked about crypto being a Ponzi. He went through this long explanation.
Like, if the total amount of money in the box is $100 million, then it's going to yield $16 million this year in X tokens being given out for it. That's a 16% return. That's pretty good. We'll put a little bit more in. And maybe that happens until there are $200 million in the box. This is a valuable box, as demonstrated by all the money that people have apparently decided should be in the box. And who are we to say that they're wrong about that? Like, this is, I mean, boxes can be great. Look, I love boxes as much as the next guy, right? And so what happens now, all of a sudden people are kind of recalibrating. It's like, well, $20 million, that's it. Like, that market cap for this box. And it's been like 48 hours and it already has $200 million, including from like sophisticated players in it. They're like, come on, that's too low, right? Like, and they look at these ratios. TVL, total value locked in the box, as a ratio to market cap of the box's token. And they're like, 10x, that's insane. 1x is the norm. And so then, X token price goes way up, and now it's a $130 million market cap token because of, the bullishness of people's usage of the box. Now all of a sudden, of course, the smart money's like, oh wow, like this thing's now yielding like 60% a year in X tokens. Of course, I'll take my 60% yield, right? So they pour another $300 million in the box, and you get a like, and then it goes to infinity, and then everyone makes money.
And then everybody makes money. And then Matt Levine was like,
I think of myself as like a fairly cynical person, and that was so much more cynical than how I would have described farming. Like, you're just like, well, I'm in the Ponzi business and it's pretty good.
SPF was also like, well, just wait, venture capital. He highlighted the difference between building and burning and said at least crypto's doing both rather than just the latter high growth tech companies, where you're going to see a big dry up in venture money, I think, over the next few months. Like, it's not looking good. Going back to like these Ponzi schemes, right? So that was really the entire thesis of Olympus and Beanstalk and all that stuff, where it was kind of like the more people that we get to invest in this, the more money that we're all going to make. And that's not necessarily a bad thing, because stocks are like that too. So Tesla, for a random example, goes up because of fundamentals, of course, but also because people are like, Elon, like, I love you, let me invest in your stock. Archegos, so Bill, who was the head of Archegos and has been charged by the SEC before, and started Archegos like after he got out of that whole situation. He bought so many stocks on just like absolutely massive leverage. Like, this guy was leveraged to the gills, and with all the banks too. Like, he was not discriminatory against different banks. And Goldman Sachs at first was like, Bill, dude, we're not going to lend to you. Like, you're a little bit much, my guy. Then they were like, actually, he's bringing in so much hard cash. Like, how can we say no? We're Goldman Sachs. And all the banks gave him money to buy more companies. But he was doing it through the form of total return swaps, which basically means that exposure, but not necessarily ownership. And the banks bought up those stocks in order to hedge against these total return swaps that Bill was buying. And he lied to all the banks and like lied to everybody about his exposure. Viacom CBS exploded. This is how everything went down about last year. Viacom CBS exploded. Archegos was imploding. And so Morgan Stanley was like, we're going to sell some stuff here. Bill, sorry, my guy. And then Goldman Sachs was like, all right, we're going to peace out here too. And then Credit Suisse and Nomura were left holding the bag. I think they lost over $5 billion combined. Bill, of course, lost $20 billion in 2 days. The most money I think anybody has ever lost in that time frame. And the SEC said, we allege that Archegos propped up a $36 billion house of cards by engaging in a constant cycle of manipulative trading, lying to banks to obtain additional capacity, and then using that capacity to engage in still more manipulative trading. That thesis, right, is more money, more thing go up. The whole thing is it works until it doesn't. So thing can go up as long as more money comes, but what happens when that money goes away? And that's the big question.
Hey everyone, it's Editing Kyla. The point that I was trying to make here is there's a pretty big connection between this idea of Ponzi schemes where more money in, more thing go up, and Archegos and what we might see in some crypto projects, and how it's all a little bit similar in the whole underlying thesis is that idea of more money, more thing go up, and it works until it doesn't. So that's what I'm trying to explain with this idea of Ponzinomics. I realize it seems like I was bouncing around quite a bit, so sorry about that.
And so the US dollar has been, this is like a total transition, but the US dollar has been absolutely skyrocketing. It's just like through the freaking roof. And it's mostly because the Fed is going to raise rates soon. They're going to shrink the balance sheet. There's going to be tightening. The dollar gets stronger. Also, the rest of the world is just not looking like an attractive investment. So Japan is going through their own economic turmoil. The yen is devalued like a crazy amount. And the Bank of Japan is like, don't worry, we're going to buy unlimited bonds and we're going to fix all this. Just trust us, please. That's not super great either because their economy is kind of in the tanker. So I think the dollar, this is a really simplified explanation, but the dollar has sort of ended up becoming this like land of last resort where there is no alternative. Just like how in stocks, there is no alternative to stocks during good times, bad times. There is no alternative to the US dollar right now. And the GDP print came out yesterday. It declined, which isn't awesome. So if you have inflation plus a stagnant economy, you got stagflation. So everybody's saying that S word all over the timeline right now. GDP equals consumption plus investment plus government spending plus exports minus imports. Nova Opinion wrote like a whole piece about how imports aren't like they're net zero on GDP. That it's a little bit confusing. I was talking to Joey Labor, Econ Joey, and he was like, yeah, this is just confusing. GDP did fall, but consumer demand is still really strong. So we're not entering a recession anytime soon. Like consumer demand is still absolutely ripping. Job growth is strong. Investments are happening. Corporations are okay. So the whole thing is GDP actually like a proper measure of consumer welfare? One could argue no, it's not. The Fed seems really intent on their path forward, and with the recent ECI, so the employment cost index, the labor market is really hot. Wage inflation is definitely kind of happening, and the Fed is going to have to hike rates in order to calm all that down. So even though GDP shrank, negative is not a good thing. There's still a lot of upward pressure on the economy that these rate hikes are going to have to be implemented in order to solve. I do think that we could see the Fed hike and then like immediately cut. So I don't know. It's worrying, man. Telonwitter. I don't know what else to call it. Telonwitter. So Elon Musk is buying Twitter as of right now. He's doing that. He sold some more Tesla, $4 billion worth. He did indeed F around and find out. A lot of banks are helping him to finance this, but there's a lot of questions around this deal. So can he finance it? Sure, like as long as Tesla stock doesn't drop to 740, which it like almost did. It was like, you know, it's down near 800, 900 range, which is pretty low. It lost 250 billion market cap over the last month. So if he doesn't have the deal go through, he has to pay $1 billion. How much would you pay to market your electric vehicle company? Probably $1 billion if you're the richest man in the world. Think about the mad amount of attention that he's getting, that his projects are getting. And I do think there's an element of truth where, sure, like he probably wants to do free speech. Carrie Swisher had a really good take on like who Elon is. And I think that, you know, he's a very, 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 very powerful man. And he shitposts. I think a lot of people take him lightly or like don't take him seriously because he's on here shitposting like with the rest of us, but you gotta take him seriously. So I don't know if it'll happen ever anymore. Karl Popper talked about this paradox of tolerance. So unlimited tolerance must lead to the disappearance of tolerance. If we extend unlimited tolerance even to those who are intolerant, if we are not prepared to defend a tolerant society against the onslaught of the intolerant, then the tolerant will be destroyed and the tolerance with them. This paradox of tolerance really applies well to what we're seeing play out. There's a line that you have to have in a functioning society. And like both sides are at fault, right? I don't care if you're liberal, conservative, whatever. Both sides are bad about that. Web 4 is going to be commodities. Nickel. That was only 2 months ago. Things go so fast when you're having fun. So the head of the London Metal Exchange was actually going to leave the metal exchange to join a crypto company. And then he was like, actually, I'm going to stay because metal and commodities are absolutely wild and they need help. And I think that's kind of a big sign to what we could be seeing moving forward. There's this crypto company that is trying to securitize people's mortgages businesses that are wrapped up in crypto. So like you take your crypto, you take out a mortgage, they're going to take your mortgage and securitize it and sell it, which like, oh my gosh, when have we seen something like that not work? Recently. I think that we're going to get into a reckoning soon. And remember, I'm bullish on crypto. I think it's great. Some of it, there is some weirdness that's happening. So Zoltan's thesis about commodities, which I've talked about before, where we have this domestic protectionism where countries are going to be stockpiling, I do think that we could see this applied to the consumer too, where people begin to rotate towards some concept of hard assets. And I don't know if it's, gold, real estate, whatever, but I do think that we're going to see sort of the emblematic aspect of physical wealth versus digital wealth. And I think that's a little bit oversimplified, but considering raw material shortages, the continued energy crisis, all that stuff, I do think we'll see individual digital wealth begin to evolve a little bit. Thanks for listening.